Hello, my name's Charles Delastic. I'm the Managing Director of Blue Bond Tax Planning. I've been a specialist inheritance tax planner for more than 18 years and have helped hundreds of clients save millions of pounds on their inheritance tax. So today's video is probably one of the most important videos we've ever produced on our channel because it addresses a fundamental problem. Every single client that approaches me says, how do I avoid paying inheritance tax? And interestingly, the issue is that is actually the wrong question, and that's the start of the issue about why they go down the wrong route in their planning and end up making mistakes. So without further ado, let's cue the intro. So hi and welcome back. So today's video is, as I said, one of the most important I've made, and it addresses the methodology for what is the best way to avoid inheritance tax. So at some point in their lives, clients activate a trigger. And what I mean, something comes into their head and they say, oh, I've got this inheritance tax problem. How should I resolve it? Now, if you're one of the children of your parents, then it's the same thing. Something activates which says, oh, we've got this big inheritance tax problem, we better deal with it. Okay, so clients approach me and they say, how do I avoid inheritance tax? And therein lies the problem. It's fundamentally the wrong question, in my opinion. If they started with the correct question, then they would understand why they would go down a slightly different path. So what is the correct question? It should be, how do I retain wealth in my family? Because that's a much wider question. Because if all we're doing is avoiding inheritance tax, that's relatively straightforward, whereas actually it's the impact of the wealth and the money that you leave your family that's important. Because let's say you end up paying a lot of capital gains tax or stamp duty land tax, it's still a drain on the wealth. So it's not inheritance tax, but it's still a drain on the wealth. So the correct question is how do I retain wealth in the family? So let me give you an example. Let's say you walk down the high street and you saw any financial advisor and they said to you, oh, actually, this is relatively straightforward. I've calculated your problem. By the time you die, looks like you're going to have an inheritance tax bill of around £500,000. So we just need to put this life insurance into place, and when you die, the £500,000 will be available to pay, and that's it. It's as simple as that. And you think, oh, okay, that's straightforward. And that's what you do. 10 years after you die, you've left, let's say, 1 and a bit million to your children, and one of your children walks into a divorce court. Well, what happens to the money? Well, if you've left them a million or whatever, then effectively half of that money is going to walk. So did your plan work? The answer is no, because you avoided the inheritance tax. Yeah, the tax got paid off, but the children still lost a whole pile of money, which isn't what you were trying to achieve. Okay, so let's presume you go down the right path and you ask the right question, what happens then? So people fall into two main areas, and it's what I call a normal distribution bell curve. So on the one hand, basically some people will say, oh, I've got this problem, who do I find to help? And they jump straight in and get help. On the other hand, at the other far extreme of the bell curve, some people will start doing some detailed research, and they spend hours, days, weeks, months, and sometimes years doing that research and putting it off, just trying to understand it all themselves. And to be honest, it's very rare. In fact, I've never in 20 years come across anybody who understood it that well to be able to make the right decisions. You really need to be doing this full time, because even after the length of time I've been doing it, I still most weeks find some tiny little nuance, which is a slight adjustment in what I knew before. Okay, so what about those people who then go down the do-it-yourself route? Well, they're almost definitely going to fail to do it effectively. Sure, I'm not saying they couldn't reduce their tax. I'm not sure they could protect their families to a degree, but would they have a fully effective plan? Almost impossible. And what about the people who did no research at all? They just jumped straight in for help. Well, there's some issues there as well. So effectively, let's say you get a great advisor and then you get all the advice. Well, because you've not done any research to start off with, you don't understand that advice and you don't understand it to be able to make a decision. And therefore you're fully dependent on the person who's advising you as to what the right thing is for your family. And that may not actually be the case. So am I then saying you spend years getting advice? Doing research before you get advice? No, I'm saying somewhere in the middle there's a relatively sweet spot of understanding you're not going to be able to understand this thing in detail. You're going to need some help. Okay, and therefore do some research. I would strongly suggest that if you're in the research phase that you download our ebook and you read that. It's pretty comprehensive. It's probably about an hour's read, but not only is it an hour's read, in that ebook there are links to a whole bunch of videos on my YouTube channel. So you may say, well, those are already available. Yeah, but in what order and how do they fit together? And what the ebook does is it helps put it in a structured manner so it's easier to learn. So if you do that, read the ebook, watch the videos that are in there, you'll have a pretty good understanding of estate planning and inheritance tax to enable you to then move forward and get advice. So when you get advice, what should you do? Well, you can get 3 different forms of advice from 3 different types of firms. So you could go to a very good firm of lawyers who may charge you £400 odd an hour, and certainly those good lawyers who are specialists in estate and inheritance tax planning will be able to guide you properly on the use of trusts, and they will also understand the tax implications of trusts. What they won't understand is the financial aspects. Well, what about business relief plans? Which plans are better and which plans are worse? What about equity release plans? Which plans are better and which plans are worse? That's not what they deal with. You'd have to go to a financial advisor. So let's say you say, okay, well, I'll go to a financial advisor then. So you go to a financial advisor, well, they'll understand the financial products, and a good financial advisor would even understand the tax implications of trusts and things, but they would have no real understanding of the whole legal framework of trusts and how it all fits together properly for estate planning. They would refer you to a lawyer for that. So now you're stuck between those 2 firms. So what about a tax accountant? Well, yeah, certainly the tax accountant would understand that quite well. They would even probably, if they were a specialist tax accountant, be able to advise you on family investment companies and things like that, which a financial advisor, very, very rare to find somebody who understands family investment companies. So unfortunately, you need all 3. So what's the solution? Well, you have to find a specialist advisor who understands all 3, and that's exactly what we provide in Blue Bond. It's taken me years to understand the legal side, the financial side, and the tax side, and therefore we can help you to move forward and make the right decision. So what we will do is we will help you to put together a proper structured plan taking into account all 3 aspects. And when you've got that plan, we will then recommend suitable lawyers to put in the trusts and everything there, financial advisors to deal with anything that comes under a regulated FCA framework, and tax and specialist lawyers to deal with, say, family investment companies and partnerships if the corporate route is right for you. So we would help you put the whole plan together under Blue Bond tax planning. And then we'd get the specialist firms to actually help you implement it. So that's how we work. So, okay, what does that mean and how much does that cost and all the rest of it? So if you look on our website, you will see that we charge a very, very low initial fee. So That fee is actually on the website, and I won't state it because it sort of varies sometimes. But basically, you will end up paying a low fee, and then we have what I call an unmatched offer. We then not only give you your advice in full, but we agree to have unlimited meetings with you. And when I say unlimited, I mean unlimited. I've got one client so far holds the record. He's on his 18th meeting. So he's had 18 one-hour meetings for his initial fee. For most people, it's probably 6, 7, 8 meetings, but that's round about £3,000 worth of advice. And if you look at the fee, you see that's extraordinary value for money. And why I believe it's unmatched is I just don't think anyone's going to do that. Why do I do that? Because I've been doing it 18 years and I know that 8 out of 10 clients proceed. So for me, it's a relatively low risk. So it's a great offer, something worth doing. If you want to book a meeting with us, go to our website and book that meeting, and it's a free 30-minute and we'll explain what we can do for you and move forward. Okay, thanks for listening and goodbye for now. Bye.